I'd like to have everybody look at the June 30th blog that I wrote, mid-year look at the FANG stocks. And what I did was a little case study on an ETF that owns the internet index stocks. All the FANGs are in here. And there's a lot of advance warning of a change of character in the way that these stocks are trading. And it came right at the end of the quarter, which shows that the institutions were starting to change their view on these stocks and were starting to lighten their positions. That doesn't mean they were getting out. They were just lightening their positions. You can see that this comes with a buying climax and a throwover of this trend channel. Very important throwover and overbought condition, which produces a change of character. This is a 2-hour chart. So just keep that in mind. And really what I want to encourage you to do is to go back and look at this. And here you can see the throwover, and then we were calling for a change of character into a trading range. And that's exactly what we've gotten since. Looking for a secondary test, we got that here with a throwover, an up thrust, and so on. So just some homework for you. And so having done that, let's move over into the main job to be done today. I have a mishmash of stuff, so this is going to be a total hodgepodge. But I want to talk about a little promotion that we have going for our Wyckoff market discussion. And this is really an educational workshop that we do every Wednesday, Roman Bogomazov and I, on looking at the markets from the Wyckoffian perspective. And we have students submit charts if they choose to. It's a great couple of hours that we spend together, and we're doing a special promotion, 3 weeks for $30, so that you can get a real feel for what we do. And just go to wyckofanalytics.com to learn more about that. And most importantly is our new TV show on StockCharts TV, which is power charting. And it's 30 minutes of intense Wyckoffian fun. So anyway, please join us for power charting. And they re-show it over and over. It's originally going to be on at Friday at 3 o'clock Eastern, and then with replays. So this is actually a chart from our Wyckoff market discussion, and I'm going to concentrate specifically on a couple of charts here, but I want to give you the big picture because there's some important things happening here. We were calling for a rally when we got into the support areas of the market earlier in the year. And we said, and we had point and figure counts that counted up to the top of the range, to the resistance area. And we've had really good fulfillment of these point and figure counts up to the resistance area. You can see something that's going on almost across the board, which is throwover and overbought condition at the buying climax in January, and then above the resistance area and at the top of the trend channel. So there's a lot going on here, and point and figure counts are being fulfilled. Now, this is not potentially a big negative for the market, but it does argue that we're going to most likely get some kind of a rest in here. So I'm going to focus on the NASDAQ here in a minute, but you can see the NASDAQ has got the best upward stride. And so we were able to draw a supply line from the buying climax through this upthrust action. And you can see how well it followed that. And then we've just gotten this little run up with a climactic thrust. You can see the acceleration throw over. And now we're back into this area for another down day, even after yesterday. And we can see that the Russell has actually become, after being leadership for much of the year, has really become kind of a little bit of a laggard, can't get to the top of the channel. And I don't think that's a big negative for the Russell, but it could be a warning about the market as a whole needing a rest. So, and then the Dow is the weakest of the bunch. And we've been of the mind that the Dow needed to get in gear and start to move up and become leadership. And it's kind of done that. It's starting to act better. So we think that the Dow has the potential to get up to the resistance area and maybe a lot higher. This doesn't even address the idea that there's huge accumulation structures potentially here for much bigger moves. And so that's a discussion for another day. And we do talk about that in Wyckoff market discussion. So, but we will be covering that in the weeks to come. So here's the S&P. You can see this beautiful trend channel. It's hugged the top of the channel here really since the end of the second quarter, and just threw over the top. Climactic action on a small scale, but sort of an acceleration. We always look for accelerations to pause the advance, at least temporarily. It's exactly what's happened, and we're at this crucial place where old resistance becomes new support at this prior buying climax. And so we can see here that we're kind of in an important place. If we come back in, I believe the risk could be down to the bottom of this channel, maybe to this central support area. It doesn't have to come down that far, but it's possible, so we're going to have to be tape readers. The NASDAQ is where I'm going to concentrate a little bit of my attention before I go on to hypodermics. But and I'm going to talk a little bit about gold. And so here you can see NASDAQ has really been the dominant index on the way up. Again, just like the S&P, it's had a throwover climax of a rising supply line, and now it's back into this area, and it's getting very close to the bottom of this steep channel. And so that's going to be interesting whether that can hold or not. And we will zoom in and look a little closer at that. These, you know, I know that you all know that I'm a big fan of intraday point figure, so I tend to do a lot of that. And here we have the S&P. Look how well these are working. This is a little accumulation. This is 15-minute data, ATR scaling, and it gives us a box size of 3.56. As a matter of fact, we are going to do a point and figure workshop in October, Roman and I. So we haven't announced it yet, so don't tell anybody. And but we're going to be doing one, so that should be a really fun and useful 3 sessions. So here we can see this beautiful accumulation, and it went up, got very close to the minimum objective, and then it pulled back and has came back in, but did not go below the low of this accumulation area. So this count actually remains valid as long as you don't completely overlap. And it built another count, and it did in fact touch the minimum count here, paused, and this completed this accumulation. And so this accumulation, it touched it perfectly up here, and the market hit the wall on this, touching this minimum objective for the S&P. And now you can see we have distribution. Now remember, this is just 15-minute data. So these are just little intra-week and swing trade counts. And this takes us down to 28.51, 28.33. And here we have the industrials. Well, interesting difference with the industrials is that we have a distribution here. We got close to fulfilling it, but we didn't quite get there, which I think is bullish when you don't get to the distribution area. But caveat, this might be just more distribution. This might be a redistribution, and I'm interpreting it incorrectly here. But so far, it looks to me like it has the nature of accumulation. Sign of strength, jumped out of a consolidation area, backed up, probably could take this whole count, but this is the potential that it gives us. So I'm going with the notion that the industrials continue to be the strength. Now, here's the important one, and this is the NASDAQ composite. And so you can see there's a big distribution here. This is 5-minute data, so it looks worse than it is because this is a very short period of time. goes back into late August. But let's look at this with a chart of the NASDAQ. This is classic distribution. This is a 30-minute chart, and we always generally have shorter, smaller data sets for the point figure than we do for the intraday chart. So 30-minute here, 5-minute here, they match up nicely. So just keep that in mind. So here, uptrend channel, it's classic. Throw over, overbought condition, buying climax, automatic reaction, and then distribution, a period of distribution forms. The key for us is we look for a sign of weakness followed by a last point of supply where there's a rally of poor quality, and this is the last point at which supply is met before the downtrend begins. That's really kind of what it means. And we take a count from the last point of supply across, and we can see here that we've broken down and out, overbought, then broken down and out of the upward channel, and now we're in a downtrend. And this doesn't include today's action. Well, what's the count? The count goes down to 79.05, 78.70, and at as of this morning, we're kind of in this area right here. So we're getting very close to fulfilling this count. So really nice job on this intraday data in terms of giving us a good count. And I believe that once these counts are fulfilled, that the NASDAQ composite could stabilize, and then we'll see whether or not it's redistributing for another move down. This also puts it in that longer term chart we looked at into the bottom of its trend channel. So it could find good support there. Okay, now changing directions, I just want to go back to a blog that I wrote very recently, and this is on gold. And this is a big messy chart. It's really designed for you to study, and this chart is in the blog. This is monthly bars, and it goes back into this accumulation, or I'm interpreting it as an accumulation, goes back into 2013. Selling climax, and then a potential accumulation structure. So the reason I published this chart when I did was because the selling climax was touched right here just under 1200, and then a period of sideways trading. We had a selling climax, automatic rally, trading range. So very traditional Wyckoff analysis, but on a monthly chart. So you can see this works on very large time frames. So we drew a downtrend channel. This is the supply line, oversold channel, and look what happened. We had a sign of strength and an LPS. This tells us that we're getting close to potentially completing accumulation. So we can have more than one LPS. So we had another really, kind of a modest rally, but took a long period of time to get up. It rallied right to the supply line, and then it came down again. 5 months down without an up month. And this is classically what LPSs look like. They just persistently go down. But notice what happened. It went down, the volume went down as the LPS approached support. Well, if this area can hold, and that's a big if, this will be a second higher low. So we have a low at the shakeout, we have an LPS low, a higher LPS low, and what we would be looking for is to get a rally of sorts that can take us towards the resistance line. And this would help us to understand that accumulation is accumulation, and it could be nearly complete. We could spend a few months down here bouncing around in the support area. So we need to be very, very patient with gold. This is a daily chart of that last LPS decline. I'm not going to spend much time here. I have more to do, other things to do. But here's a supply line. Look at how beautiful this is. Classic distribution. And this is on the daily chart, setting up and signaling that a downtrend is coming. It goes down, it accelerates down and out of the trend channel, And this is a climactic surge. It says selling climax here, but this is also potentially the LPS low, and this is where the support line is on the monthly chart. So there's all kinds of stuff going on here, and we have had a rally up back in to the range, and now we're coming back and we're attempting to test where it's still at a higher low here. So this is interesting. This is a very interesting combination of, you know, looking at the monthly, looking at the daily, and then having the theory that this could be an LPS, which would produce a rally of better quality. You can see here this rally is already better than anything that's come before it until, say, here in the middle of the distribution area. So this is a rally of improving quality, change of character. So study that chart if you have time. And here's the point and figure. So the point and figure of the main body of distribution gives us a perfect count down to the low, which is the support area. And then also there's a slightly bigger count we can take, and this count takes us down. If this count may yet be fulfilled, but so far we've missed it by 2 boxes. So that's pretty close to a hit right there. Okay, and then here's distribution schematics. You can go look at these to compare them to the distributions that we just looked at with both the comp and gold. And that is in the September 24th, 2015 blog. Okay, so here is, let's see, how are we doing for time? We have about 6 minutes. Okay, this is going to be a really fast discussion of hypodermics. And hypodermics are these long uptrending periods where a market, an index, a stock goes up and up and up, and then the rate at which it goes up accelerates dramatically. And so you can see here that I'm looking at a GBTC, which is the Bitcoin Investment Trust, as a proxy for Bitcoin. And we are going to analyze this as a hypodermic, and then we're going to look at some historical examples. Here's China large cap as a recent 10 years ago historical example, and look at how well they match up. This was a Tom McClellan moment for me, because I'm looking at this Bitcoin chart and I'm going, you know, this chart looks familiar to me. I've seen this chart before. And this was a chart of China large cap that we had studied in the classroom with our students. We had a number of students from that part of the world who were studying from a Wyckoffian perspective the stocks that make up these indexes. And they were very concerned about the fact that there was a hypodermic type advance that was forming. So what do we look for in a hypodermic? I mean, they did great work on this. And so we looked at this week after week, is that there's an advance. Here you can see with Bitcoin, it came out of the area of the upward stride, but then came right back in, and look what it did. It accelerated the rate at which it went up. So we could draw an upward channel here where we can see the upward rate of advance accelerating from the main stride of the advance. So the main stride continues to be important, but notice this. We have a throw over not only of the main stride, but also of the advancing, the accelerating stride, to give us an overbought condition, and this produces like a fever in the market, a hypodermic. And so as it went up and out, this is an exhaustion kind of climactic action. And so you can see here with the China large cap, it did the very same thing. Now what I've done is I plotted them back to the point at which they broke their rising stride in both cases and stopped there. And the point I want to make here is that this was a request. Somebody had asked that we talk about Bitcoin. I don't follow Bitcoin closely. I have, members of the Wyckoff tribe that follow it and want to talk about it, so we do that. And so this, I think that the interest, all of a sudden, there's been more interest in Bitcoin lately. And I believe it's because there's this idea that Bitcoin is making a base here. And so let's see what can happen. Because the main concern is that we consider the risks that could be exist at a point in time. So how much risk is there out there right now? And so we can see here, this is the same chart. I just blew it up a little more, a little easier to see. We can see the stride, accelerating stride, and then the overbought condition and the throwover. Well, look at how this Wyckoffian concept, this tool, gave us a warning about the risks being very high, just as we had talked about with the comp, NASDAQ comp. It showed us that the risks were very high. FDN, trend analysis, showed us the risks were high on the throwover. So here we are, it's gone through the major stride and now is slightly below it. So I would say this, Bitcoin needs to get in gear and get back up into its stride, and it needs to do it in short order. It should not break down below these key lows under this lower trend channel. What can happen? So for people that are in Bitcoin, this is, you need to think about the tape action, and what is it that you need to see to maintain your bullish posture if you're long Bitcoin. And so let's compare GBTC and FXI as our historical model from 10 years ago, and let's see what happens. So, well, we don't know. We don't know where Bitcoin goes from here. This is what happened to the China large cap. This is where we concluded our analysis, because this is approximately the place where GBTC is at this place right here below the channel, and you can see what happened to China large cap after it broke down these key prior lows. So you can see that liquidation came in, and the liquidation just engulfed the trend of the market, and it just had a huge climactic decline thereafter. And so this is what happened with FXI, and I want to show this schematic because this is a schematic of the hypodermic top. So you can see breaks the stride, attempts to rally. It has a huge, very wide distributional structure, and here you can see it with FXI. Last point of supply, preliminary supply, huge vertical structure in this top, and then it just cascaded downward. So this is the reason that we really need to see Bitcoin stop here and rally back up. Otherwise, the risks, I think, are measurably high. This is the Dow Industrials 1920 to 1930, and so the same type of analysis. It's below its upward stride. You can see the accelerating stride. This is about 9 years of data. This was about four to 5 years. And here we are just at the lower channel and just sort of bouncing around there. And then here's what happened when it broke down. So this was, and there's a specific reason why hypodermics happened. I don't have time to talk about that today. But I would like you to just consider going back and looking at these. This is gold. Gold's another hypodermic that we can study. You can see that it's in its stride. Gold broke the bottom end of the stride, and then it just started to just persistently drop after that. So these are just examples of different hypodermics in history that we could maybe use to inform our Bitcoin analysis. So Bitcoin needs to hold around these lows, get back up into its upward stride, and this is a daily chart of Bitcoin right here, or GBTC as a proxy. This is the actual Bitcoin index in StockCharts.com. So you can see that the correlation is quite high. So for analysis purposes. Okay, and a couple of schematics of Hypodermics that you could screen capture if you like. And then I want to show you a chart of Sprouts Farmers Market. I'm not going to spend any time on it because I am out of time. But this is a stock that I think is very interesting. It's come down. It's a relatively young company, selling climax, automatic rally, and then an upthrust. We can see how well it's done building a potential accumulation structure. We look for a sign of strength, and then a last point of support comes to a higher low. We can take a point and figure count of this. So we're in the area of $27. We have a point and figure count here. This count goes to approximately $87. So
hey,
anyway,
since you're on that, excuse me, Bruce, since you're on that point and figure chart, somebody did have a question about what you mean by overlapping P&F counts negating a count.
Oh, okay. I think that refers to this. I was talking about how this was a very deep pullback. So it came way back into the area of the count, this prior count. It did not go below the low of this count. As long as it does not, this count is still active and valid. So see, it made a higher low here. I think what I was referring to is that if it does go below the low of this count area, which is down here, like 2 boxes lower, if it was to go below that, then this count would be negated. Well, it came within 2 boxes of touching the minimum. So that was a pretty good count. This count made a nice trading rally here, but we could still consider this count as being active because this did not go to a new low. That was my point. And it's kind of just a rule. It's sort of an essential rule to point and figure that really helps us to sort of know when a count should be considered to be still active and when we want to just throw it out.
Excellent.
Yeah. So anyway, so there we got through the important stuff. So Sprouts Market, that's a really interesting chart. I encourage everybody to make a chart of that and mark it up and do the point and figure.
Excellent.
Hey, Bruce, I got a question. You know, when we first started, of course, we started with all those jokes about TLRY, which is a cannabis stock. Would you be looking at that group because of the almost parabolic? And I'm assuming Hypodermics, when you talk about it, very similar to the parabolic structure on a chart.
Well, here's the thing, and there's a whole discussion we can have about why hypodermics happen, and it's a mind-blowing discussion. It's really interesting stuff. And I learned this from talking to my students back 10 years ago, and also studying the 1920s in the Dow Industrials. There's very similar conditions that existed between China large cap and the industrials back in the 20s. There's a psychological condition that was common to both. So anyway, the thing about the canopy and the marijuana stocks is that's unique to them and is similar to Bitcoin is that they are all new markets. We don't know exactly how they're going to be received, embraced. There's a lot of excitement and expectation about how much growth there could be for, say, Bitcoin, how much growth there could be for the marijuana stocks. And there's no limit to how high these stocks can go up because of this sort of fanciful thinking about how much growth there could be. And they can go up for a long time. The thing to do is to do this trend analysis on the marijuana stocks the way that it was done here on Bitcoin, because there could be an uptrend for a long time.
Mm-hmm.
I don't study them. I'm not that close to them, but I can see that there's a commonality, sort of a psychological commonality that's at work with these themes.
Excellent. I do appreciate coming on, Bruce. Always a pleasure to have you, and we look forward to having you on again soon, my friend.
Wonderful. Take care, everybody. Thank you all.
Thank you.